Hey everyone, Dave Keller here with Market Misbehavior. Today I'm excited to share with you a pretty compelling buy setup. I'll show you the chart, what it means, what conclusions we can draw, and what it implies about a key sector in the financial markets. I'm going to share with you the chart here in a few moments. Pretty constructive setup. I'm interested to see what you think as we analyze the chart. We'll also talk about what it implies for the broader markets and one particular key sector. Before we get there, by the way, if you like this sort of thinking about technical analysis, market history, investor psychology, and behavioral finance, won't you subscribe to my channel? Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below, thumbs up or thumbs down on this chart and why. Let me know in the comments. Here is the chart I've been implying in the introduction. Pretty interesting sell-off in 2021 into 2022. What's really interesting about this chart, think about it, below the 200-day moving average, which is in red, tested it a number of times in June and then in September, made a double bottom here with the low in June and a little bit of a lower low in October. We'll call that sort of a retest of support. From there, finally broke above the 200-day moving average, retested it, and broke higher, and that was in January. Put in a key higher low. From there, a pretty consistent pattern of higher highs and higher lows. If you step back a little bit, you can see this is sort of a cup and handle like pattern. It's not an ideal one because you're going to have this weird double bottom pattern, but overall you sort of have this rounded bottoming pattern, a resistance level that's fairly consistent, and now we've had sort of a shallower pullback and potentially setting up for a nice rebound. Getting above 44 might be an interesting entry point, getting above that level of resistance. Look at the relative strength over the last 6 months. Now that has been pretty consistently strong. So thumbs up or thumbs down. Overall, pretty decent setup. You notice anything weird about this chart? Besides the fact that I've blanked out any identifying symbols I could see on here. This is actually a chart of DVN, Devon Energy, which is a key energy stock, but it's inverted. I've actually just flipped over the scale. On the StockCharts platform, you can put a little minus before the ticker, and that actually flips the vertical axis over. You can see here, if you look, the numbers are going up, so it's sort of and the log scale is kind of compressed at the bottom and exaggerated at the top, so it's literally flipping over the log scale, but you can see how compelling of a setup that is, right? Here's what the actual chart of DVN looks like. Right side up, everything normal, and forgive me for misleading you a bit in terms of what chart we were looking at. But what we're doing here is sort of stretching our thinking a little bit. There is a bias called the endowment bias or the endowment effect. It's a common behavioral bias or cognitive bias where basically we become emotionally attached to a stock, and I'm summarizing here, become emotionally attached to a stock, and as a result, even though the evidence is clear that we should sell it, we hold on to it way too long because of that emotional attachment. Not because the evidence is particularly strong, not because the evidence supports the fact that we should continue to hold it. It's because of this connection we have with the position that we hold on to it. And it's not just with investing. You'll have this with things that you own. Think of something really special like a shirt or a coffee mug or some special trinket that is really meaningful for you. And even though it may not be useful anymore and you probably could just get rid of it, because of your emotional attachment, you hold on to it way too long. That's what we tend to do with stocks, way more than we probably like. A good investor buys stocks, I would argue, follows trends and buys stocks that are moving higher, right? And capitalizing on the capital appreciation of prices over time. But a successful investor also recognizes when the picture changes. The reason why I'm bringing up the chart of DVN right now is because we're following a lot of big growth stocks like Nvidia and Amazon and Apple and Microsoft and so many others of these sort of mega cap FANG stocks that have been in strong uptrends. Stocks like Palantir and AI and others are just gapping higher and just blowing out to the upside, fueled by this excitement about the promise of the future promise of AI. But what happens is those trends are working very, very well, just like energy was working in the first half of 2022. I challenge you to find a better name than something like DVN or FANG in the first half of 2022. But then things started to change, right? Instead of making new highs, we started to make lower highs. Instead of breaking through resistance, we traded right up through resistance and failed. Instead of pulling back to an ascending 50-day moving average, we broke through it. Instead of holding at the 200-day, we broke through it. Now we're below moving averages that are sloping downwards. Instead of the relative strength improving, we're underperforming the market by owning DVN. Now, A savvy investor, a savvy technician should recognize the shifting tide, should recognize an accumulation phase where the prices are going higher because of demand outweighing supply, because of buying power overwhelming any need to sell. Recognizing its consolidation phase where buyers and sellers are basically in agreement, and then recognizing a sell phase or a distribution phase where the selling pressure is overwhelming any buying power that might come in and be interested in pushing the price higher. Where on this chart would you have recognized that the trend had shifted from an uptrend to a consolidation phase, and from a consolidation phase to a downtrend? That's the benefit of inverting a chart. It very simply just breaks you away from the mold, right? Breaks you away from any preconceived bias. The chart looks a little different. And what I would encourage you to do if you're struggling with a particular chart, particular position, put the little minus sign on StockCharts before the ticker or whatever platform you're using. A lot of them have the ability to invert the scale. Do that and look at the chart, and without thinking about what the ticker is, just analyze the price, dig through the weight of the evidence, and then draw your conclusions. List out a checklist on paper and actually lay out what the evidence tells you, and see what the weight of the evidence is with this new, different looking chart. Does that tell you anything different about the chart we looked at before? Finally, a lot of times what we used to do is do what's called the new money question, right? Ask, if I had new money to work, would I put it in this stock or in this chart today? And if the answer is yes, then you should consider holding that position or even adding to the position. If the answer is no, then why would you put new money behind money that is not working for now, right? Cut your losses, get out of things that are not working, rotate into the things that are working. Because one thing I will tell you in May of 2023 is there are things that are working out there. You just have to know where to find those opportunities. Inverting the chart is one of those tricks to unwind the damaging effect of the endowment bias or the endowment effect. I hope you found that an interesting way of just challenging your thinking, sort of stretching your perspective looking at charts. It's a great trick to use, particularly on a position or a trade that you're struggling with. You're just not quite sure what to do. Flipping the chart a lot of times can just nudge your thinking, break you out of any sort of biases you might have been building up, and just focus on the weight of the evidence. What do you think about DVN now after seeing the chart in its proper form with the setup? Are we testing support? Is this the time to be adding into the sort of position? Or do we recognize the fact that the trend overall has been lower? Now that the chart's right side up, I'm definitely looking at a trend line off of the highs and tracking that move to the downside. Until we can break above a trend line from the previous highs, I'm not sure how strong of a chart this is going to become. For Market Misbehavior, I'm Dave Keller. Be well, stay safe, and we'll be back with you again soon.